Hello students, welcome to the Income Tax Law and Practice class with me Adela Samuel, Head Department of Accounting and Finance. In today's class, we are going to see the treatment of admissible or certain expenses and incomes under the head Business Income. So first we will see the first sum. Sum 1. A firm paid rupees 25,000 for advertisement expenses in cash. Compute the inadmissible expenses or inadmissible amount. So when you say inadmissible amount, it refers to the amount that is not applicable in the business income. So it should be called as inadmissible expenses or inadmissible amount. So the solution for this is, according to the rule under business income under the IT Act, any expense that is exceeding rupees 20,000 should be paid in a crossed payable check or a draft only. So if you're paying any amount of expense above 20,000, you have to pay it in a crossed check only. If it is paid in a check or in a bearer check, 100% of such payment will be disallowed. So if you're going to pay it in a cash basis, or if you're going to pay it in a check where it is not crossed, it's a bearer check, then in that case it's just like a cash that you're paying. So if you're going to pay it in cash, 100% of such amount will be disallowed or it will become inadmissible. So in this sum, the advertising expenses are paid in cash. Clearly it says it's paid in cash rupees 25,000, which is more than 20,000. Hence the entire amount is going to be inadmissible. Sum 2. A firm's stock of goods is valued on 1/4/2019 and on 31/3/2020 at rupees 2,50,000 and rupees 3 lakh at 20% below the cost. So they are valuing the opening stock and the closing stock below 20%. Calculate the amount of undervaluation of stock. So in this sum, they are giving you the values of opening and closing stock and they're saying it is undervalued. So how will you take it under in business income? So first we'll see the opening stock. 1/4/2019 is the opening stock, which is 2,50,000, and we know that it is 20% below the cost. So that means it is being valued at 80%. So 2,50,000 is 80% value. So we have to find out what is the remaining 20%. So if 2,50,000 is 80%, what is 20%? So in that case, what should you do is 2,50,000 into 20 divided by 80. You will get the value of the 20%. So if you do that, you're getting 62,500 as your undervalued opening stock. Now come to the closing stock. Closing stock is given at 3 lakhs, and there also we know that it is at 80%. So 3 lakh is 80%. So what will be 20%? So 3 lakh into 20 divided by 80. That will give you your value of 20%, which is going to be 75,000. So this is the values of the undervalued stock, which is going to be coming under the head business income. Now coming to the third sum. Honda Limited has incurred the following expenditure for promoting family planning amongst its employees during the previous year 2019-20. Revenue expenditure on family planning is 1,20,000. Capital expenditure on family planning is rupees 6,50,000. The company's business income before deducting the above mentioned expenditure is rupees 2,20,000. Income from other sources amounts to rupees 25,000. Now, in this case, we are going to consider only one point, that is family planning. So in case a company has a revenue expenditure on family planning, according to the rule, it can be fully deducted. So if there is any revenue expenditure on family planning, the full amount can be given as deduction. If there is any capital expenditure on family planning, in that case, 1/5 of it can be deducted in the first previous year, and then the remaining amount can be deducted in the following 4 previous years. So it should be the amount that you have as capital expenditure should be divided by 5, And for 5 years starting from the previous year, that current year previous year, you should start deducting 1/5 of it. So for 5 years continuously you would be deducting. So in this year's calculation only 1/5 of the amount will be taken as deduction. Now we go for the computation of gross total income for the assessment year 2021. So start off with the net profit before deducting family planning expenditure, which is given to you at 2,20,000. From this we are going to minus the revenue expenditure. I told you revenue expenditure, if you have for family planning, it is fully deductible. So we'll take the entire 1,20,000 as deduction. Second part is the capital expenditure. 6,50,000 is given as capital expenditure, which can be deducted in 5 equal installments. So you divide it by 5. 1,30,000 is going to be your capital expenditure, which can be deducted for this year. Now out of this 1,30,000, you can only take 1 lakh, because in the outer column the net profit itself is only 2,20,000. Your revenue expenditure is 1,20,000. The remaining amount that you can take is 1 lakh only. Only then you will get 2,20,000 and your business income can be shown as nil. If not, it will become a negative figure, which is not allowed. Okay, negative figure cannot be taxed. Understand? So it can either be a positive figure or it can be nil. It cannot be a negative figure in case of an income tax sum. Okay, so from 2,20,000, revenue expenditure 1,20,000 can be minused, and the remaining 1 lakh of the capital expenditure is minused. So 30,000 is a balance. We have to wait for it. Okay. Now you have the income from business as nil. Now when you see the sum, they also have given you an income from other source, which is 25,000. It is a different head of income. You're also getting an income from another source, which is 25,000. So in the same year, you also have a loss unabsorbed family planning expense of 30,000, which you were not able to do it before. Capital expenditure, that 30,000, only 1 lakh you were able to give, 30,000 is remaining there. So this 30,000 can be set off against the income from other sources. So because it is your own income, the same person's income, because he is getting an income from another source, that income 25,000 can be used to set off this family planning expense. So 30,000, out of the 30,000, you have an income of 25,000 from other sources. So till 25,000 you can minus it off. So 25,000 unabsorbed family planning expense is minused here, and the gross total income of that person is shown as nil. But the remaining 5,000, there is still a capital expenditure of family planning, 5,000 left. That 5,000, which cannot be absorbed, can be taken to the next year. So in the next year, if there is any income from business or if there is any income from other sources, then in that year, the next following year, this 5,000 can be set off. So whatever can be set off this year is set off in this year's income. Whichever is not able to be set off can be taken to the next year. So that is how this sum has to be done. Okay, let's move on to the fourth sum. Determine the deductibility of the following sums under section 35. Okay, so now they have given us certain questions which fall under the section 35 under the Income Tax Act. So here they say Y and company pays rupees 30,000 to an approved scientific research institute to carry on research on a subject not related to its business. It pays rupees 20,000 to an approved scientific research institute to carry on research in the field of social science not related to its business. It spends rupees 3 lakh on acquiring a plant for its own laboratory to carry on research for improving the quality of its products. It spends rupees 1,40,000 on salary and perquisites to the research personnel. A computer costing rupees 50,000 was purchased with the object of using it for research, but on acquisition it was found that it cannot be used for research purpose, so it was installed for the business office. So all these questions, if you see, it is related to some kind of a scientific research that the company is donating to, or research work that the company is undertaking in their own company. So in this case, what we need to do is we have to check how much percent is allowed as deduction. What percentage is given as deduction under each head, and that can be given allowed as deduction. So if you see the solution, for the first question, payment to an approved scientific research institute to carry on research on a subject not related to its business is deductible at 150 percentage. That means 30,000 into 150 percentage, 45,000 is allowed as deduction. Second one, if you see, it is given, it's a payment made to an approved scientific research institution to carry on research again for social sciences. In this case, 100% is allowed as deduction. So 20,000 into 10%, 100% is 20,000 is given as deduction. Third one is acquiring a plant to undertake research is a capital expenditure. Again, for research purpose, under section 35, it's deductible at 100% again. So 3 lakhs they have used, 100% is given as deduction, 3 lakhs again is taken as deduction. Next one is they are using some money for payment of research personnels. In that case, again, wholly the entire amount, whatever they spend for research personnel, wholly they have to give it as deduction. And the last one, cost of computer. They have bought it for research purpose, but they were not able to use it for research purpose. So in that case, it cannot be treated as a research purpose and no deduction can be given. It can be generally treated as a asset that is bought for a company process or for the company's business. In that case, you can only give a depreciation, claim depreciation on the asset, just like normal other assets. You can claim depreciation, but you cannot claim any deductions. So this is what you have to give as answers. So for this, you need to know the theory bit about what kind of research payment is allowed, what kind of research payment is allowed, 150% and 100%, so that you will be able to answer this question clearly. Okay, now we are going to calculate the computation of business income. So apart from the deductions and all that, how are we going to see the business income of the full-fledged sums? We are going to start off now. So this is a very simple sum to understand. From the following, compute the business income of Mr. VJ. So salary income is staff salary, rent, sales, commission on sales, bad debts recovered, dividend is given. Usually they will give you the profit and loss account and you will have to take the net profit and start off with the sum. But in this sum, net profit is not given. All the expenses of a business company is given to you. Business is given to you. So like they are paying the salaries, they are paying rent, sales, that is happening. Commission on sales is given. Bad debts recovered is coming into you. And dividend, some kind of dividend income is also coming. So all this is what you get as information about the business. So from this, first you have to see what is your net profit. So to calculate the net profit, the profit and loss account has to be drawn. So how can you calculate the net profit? So you have sales, you have bad debts recovered, which is again an income, and dividend is also an income. All these three are income that is coming to the company. You add that. And from the income, you're going to minus all the expenses. What are the expenses? Salary, rent, commission on sale is paid. So all this, if you minus, you will get the net profit. So 75,000 sales, bad debts 10,000, dividend 20,000, minus 25,000 salary, 5,000 rent, 2,000 commission on sale. So you're getting 73,000 as net profit. So now you can start off with the sum according to the format that I have given you earlier. So you start off with net profit 73,000. Add back all the inadmissible expenses. Any inadmissible, that is any expenses that is not allowed as a business expense, it can be added back to net profit. So there is nothing like that in the sum. So you take it as nil. Now, if there is any non-business income, you can minus that from net profit. Is there any non-business income? Yes. Dividend income is a non-business income. It's not because of your business. Because you have invested in somebody else's business, you're getting a dividend. You're invested in some shares of some other company. They're giving you a dividend. So it is like a income from another source, not your company business income. So non-business income, dividend you can take. So that you can minus it off from the net profit. the total business income that this person has is 53,000. So this is the format that you have to use to work out the sums under business income. Sum number 6. Mr. Rahul submits the following particulars of his business. Calculate the income from business. Net profit as per profit and loss account after charging the following is given as 40,000. We are going to calculate the business income of the person. Net profit after charging all these things are given to you, like the sales tax, income tax, bad debts provision, commission to procure business order, income on capital, depreciation is given, and depreciation as per income tax rule 1800 only should be given. So that is also given to you. Now coming to the computation of the sum. Computation of income from business. So you start off with the net profit again. So you have a net profit of 40,000. From this you can add back all the inadmissible expenses which is not related to your business. Income tax is not related to your business. You can take that 3,000. Bad debts provision. You're just setting aside a provision. It's nothing related to your business workings of the business. So that can be taken as inadmissible expense 1,000. Interest on capital. Again, it is interest on capital is also considered as an inadmissible expense. You take that as 1,500. Then you have depreciation. Usually depreciation is taken as an admissible expense in a business concern, but the excess amount that is not supposed to be charged as depreciation is taken. So actually 2,000 rupees has been charged as depreciation, but only 1,800 should have been given. So the remaining 200 is charged extra. So that has to be added back to the profit. So 200 is added back to the profit, and so total of inadmissible expenses 5,700. So from the 40,000 you're going to add back 5,700. So your business income is going to be 45,700. Why are you adding back all these? Is because your net profit is from your business income only. Okay, but in this net profit, whatever is not related to business is also minus. Okay, so that is why you are going to add it back and you're going to show only the profit that belongs to business income. And that is why from the net profit of the company, you're adding back all the unwanted expenses that you have already minused in the profit and loss account. You're going to add it back, which does not belong to the business income. So if you add it back, you'll get the income of the business alone and not income of all the things put together. You understand? So business income alone is going to be 45,700. So this has to be the procedure for going through this kind of sums, business income. So thank you students. Thank you for listening to these sums. So there are 6 sums that has worked out for you. Please go through these 6 sums. Repetition of these kind of sums only will come in a little elaborate manner in the next topic. So in the next class when I meet you, we will do a few more full-fledged sums. Thank you.